Good morning. Welcome to Stock Market Today, Monday, July 13th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. We also give you daily stock ideas to consider, and those hit your inbox every trading day before the market opens. So I hope everybody had a great weekend. Let's get back to it. Going to be a big week as earnings season kicks off tomorrow with the big banks. But before we dig in, a little bit of a recap. U.S. equities were higher in Friday's trading, finished near the best levels of the day. Got some positive news out of Gilead regarding their drug and what it could mean for reducing death from COVID-19. Large caps led small caps for the week. Treasuries were weaker across the curve. The dollar was weaker on the major crosses. Gold finished down 10 basis points, but still posted a fifth straight week of gains. WTI crude ended higher by about 2.3% on Friday. Now, as we get to the desk this morning, we're seeing a little bit of follow through to the upside without a lot of company-specific news or any really macro-driven news behind it. Futures are up 40 basis points. After finishing higher last week. Asian markets were higher overnight. Japan and China outperforming, and European markets are trading higher here this morning. Treasuries are unchanged to slightly stronger at the front end of the curve. Now, that's something we've been talking about a little bit, and it did bull flatten last week as well. Dollar weaker against the yen and the euro. Gold up 70 bips. WTI crude down 1.7% to kick us off on a Monday morning. But really this week, it's going to be all about earnings, and it's going to be all about earnings for the next couple of weeks. Now, hard to think that expectations are anything but on the floor, right? Consensus estimates are for second quarter earnings to decline about 45% year over year for the S&P 500 in the second quarter. So, expectations should be suitably on the ground, right, at this point. So be interesting to see what company managements have to say, right? First quarter, you largely received a pass. If you were a management team, you had carte blanche to pull your guidance, right? And kind of say, we have no visibility into what's going on. But now economies around the world and around the country have been reopening in stages. We would hope that managements are in a position to kind of give us a little bit of visibility into what the back half of the year and early part of 2021 looks like. But I guess that's something we'll find out over the course of the next couple of weeks. That being said, where do we stand for the S&P 500? Not much has changed, right? The past month has been marked by this trading range that we have been talking about, right? And we're pushing on the resistance zone now. And is this the week that something happens, right? Is the start of earnings season going to be the catalyst that drives the market out of this zone? I don't know the answer, but I'm prepared to act in either way. Whether we break topside or whether we break to the downside. It's something we've been writing about for our clients, for weeks now, right? Having the game plan and what the game plan should look like should support or resistance break one way or the other. 3,000 to 3,100, the levels you're watching on the downside. 50-day, 200-day there. Everybody's going to talk about the golden cross. Yes, I see it. Quite frankly, if you sold the death cross and bought the golden cross, it didn't really help you one bit this time around. Below 3,000, 2850 to 2950 becomes important. And for us, the base case still remains that the February highs are in play because support has continued to hold. In the near term, we need to get above resistance in the 3150 to 3250 range, right? It's there. It's well defined. We can all see it. It's about a month old at this point. CCI 13 and 3-day moving average of that indicator still closer to or at an overbought condition. Chaikin money flow snapped back to the bullish side with Friday's move higher to close the market at the high of the day. Remember, Chaikin money flow takes into account where a stock or an ETF or an index closes within its range, right? So closing at the high of the day on Friday helped juice this indicator back to the positive side after a brief trip into negative territory. So stocks enter the week near overbought in the near term. That's across the board. SPY, IWM, the Qs, right? Treasuries remain well bid. And we had two strong auctions last week, right? the auctions last week, both the 30-year auction and the 10-year auction for Treasuries were both well bid. That's kind of interesting to me, given where we are in the recovery, right? It just show you that there's demand for Treasuries still there. Commodities are working higher. It makes me wonder: is inflation on the rise? It's something we've been talking about, something we're keeping an eye on, and then what that could potentially mean for the for the total market landscape. Really, I think we're at an important juncture in the market where even if you are solely focused on equities, I think it's important to be paying attention to what's happening in other asset classes, right? What are treasuries telling you? What are commodities telling you, right? Because then you'll start to see confirmation or disconfirmation in the equity market. So far, the dollar holds key support. Futures point to a higher open today, as I said. Let's dig in on the power bars now. Dow 48 bulls to bears after adding about 1.5%. Yes, on Friday. S&P 500 up 1%, 102 to 101. So kind of straddling that break-even line, if you will, for the ratio. Nasdaq slight underperformer as the Gilead news helped juice some of the beaten down, cyclical / coronavirus reopening names, right? So we saw small caps outperform, right? We saw energy, we saw, the airlines and the cruise lines do well. Also had some commentary out of Carnival, right? So the NASDAQ took a breather. I wrote our note over the weekend, and a big part of it centered on, and we'll look at it here today, a big part of it centered on how the growth to value relationship that we've been all over and been right on is stretched to the upside here in the near term. Small caps outperform, bonds down, take sending yields higher, financials, one of the beaten down areas, rallied 3.5% on the day. So let's take a look at our stock of the day, Copart, CPRT, and this is kind of an extension of that growth value theme. I think growth is extended to the upside. So I started looking at some of the growth areas of the market, and then I wanted to drill down on bearish and very bearish names that are overbought with bearish money flow that are actually lagging, right? Imagine if you're a growth stock and you're in a growth area of the market and you're still lagging in the market, right? I probably want to set you up bearish, right? I don't know how it's going to play out. I think I like doing this in a risk-defined way. I think you should take a look at a name like Copart that meets all that criteria: weak trend, weak money flow, overbought, underperforming. Drop down an option strategy, see if there's a way to potentially take advantage of the fact that the growth over value trade is extended. Growth has been leading, growth sectors have been leading, and this stock is not leading, right? To me, what does that tell you, right? When you can't even be strong, when your factor is strong, and when your sector is strong, I probably want to short you. And that's kind of how I feel about Copart here. I've laid it out in my note to clients today, and I'm laying it out here for you. Let's take a look at our sector tracker, movement in the major sectors over the last 5 days. Comms, discretionary, and tech. There's your growth, leadership. We get it. It's there. We all see it. It's stretched. Staples, fins, materials, and utes. Also about middle of the road, with Staples and fins leading after financials had that great day on Friday. Bottom of the list, still your cyclicals, right? Industrials, energy. A little surprised to see healthcare there. Would like to see, but healthcare is kind of bifurcated. The growthier areas of healthcare, like med tech and biotech, are actually doing well. Your pharma is kind of what's lagging there. Service, middle of the road. Energy, just I don't know. I'm tired of talking about energy. I've been doing it for so long, and it's bearish. It's just it looks ugly. Let's look for opportunities, right? Our industry in focus today: insurance services. Absolute disaster over the past 6 months, lagging the S&P by 20%. What's interesting here is we have a bullish ratio at 13 to 7, but all of these stocks, CNO, UNM, MCY, they are all underperforming, right? So the group is number 10, middle of the road. So the strong ratio, but drill further, right? KIE is the ETF that we watch here, neutral rating, weak trend, underperforming. I'm completely uninterested. I kind of flew through that one, but it's not appealing to me. It doesn't look good at all. Let's look at our movers and shakers now. Carnival and Royal. Carnival provided an update on their bookings and had some positive things to say. Stock moved higher. Royal goes along for the ride there. MPC, nothing company specific, still a very bearish stock, up 8.5% yesterday. UAL, United Airlines, came to an agreement with their pilots union on furloughed employees. Also, the Gilead news probably helping there. UAL, neutral stock, up 8.3%. Netflix, Goldman Sachs raised their price target on this monster, up 8% yesterday. Loser side of the board, Mohawk was lower all week. Lawsuit ongoing, a lot of back and forth on that. To me, kind of no reason to pay attention. There's other names out there to look at. You don't need to be messing around with something that has a lawsuit unless you have a skill set there and can drill in on the special situation side. Synopsys and Regeneron, these are just market leaders that came under pressure on Friday as we saw some profit taking in the big leaders and the names that have done well. I would chalk PayPal up to that as well. INSEE, nothing company specific, down about 3% on the day. So let's dive in. And this is what I'm talking about here. We all see it. It's known and it's crowded. I don't think there's anybody who pays attention to markets who doesn't know that, leadership is concentrated in growth stocks. In particular, it's concentrated in the mega cap growth stocks. Now, I'm looking at kind of big picture here with the, core U.S. growth against core U.S. value, right? So it's a little bit bigger picture. It becomes more bifurcated. We know the top 5 stocks in the S&P 500 make up about 20 to 25% of the index. We know. Everybody knows it. It's crowded, right? Does that mean it has to stop working? No, it doesn't have to stop working. It's been crowded for a while. What I'm saying is you don't have to chase it here. It was the point I made in my note over the weekend. It's the point I'm making here today. This ratio is stretched to the upside. Okay, it's over 20% above its 200-day moving average. The RSI is overbought. You can see it in the Q versus SPY ratio too, right? Look at that breakout top side, and it just keeps going, right? So if you haven't had your portfolio set up for growth over value, I don't necessarily think today's the day to do it, right? And it may not be that this week is the week to do it, right? Banks are very much value. So if they surprise to the upside during earnings season, I wouldn't be surprised to see some juice to the value trade here in the near term. Now, bigger picture, longer term, I wouldn't be surprised if it did pull back. If this ratio did pull back, it would probably set up. You'd be in a position to defend it. But if you miss this boat, I don't necessarily think today's the day to try to jump on it. That's the point here. I'm not changing my tune on growth versus value. This trend is still very much to the upside. My view is that it's extended here in the near term. Commodities grinding higher, and this kind of gets to one of my more recent themes that I'm watching, and that is one where inflation starts to pick up. We've seen a ton of stimulus, both fiscal and monetary. To the extent that that helps growth, great, but we're not really seeing it yet. But we are starting to see a pickup in commodity prices, right? And to me, that's inflation, right? We'll see if it has legs. I don't know. Take a look at DBC. I think DBC above kind of the 1250 to 1275 range becomes interesting for at least a shot at that 200-day moving average, right? And then kind of a reevaluation. But think of an environment where there's little to no growth, but there is inflation, right? Think about what that means for a company where the growth portion, their revenue, is slowing, but their expense portion is ticking to the upside. That's a disaster for margins for companies that can't pass along price increases. So it'd be interesting to see what plays out here. So far, we are starting to see it in the trends, and Treasuries do remain well bid, which is interesting because the market, right, it seems like everybody's bullish the market. Market's had a great run off the March 23rd lows, but look at Treasuries, and it's across the curve. Look, IEF, top of the screen, trading near the highs. That's midterm, right, 7 to 10 year. What about, 3 to 7 years? IEI, trading near the highs. TLT, long-term, trading near the highs, right? The 30-year auction last week went off well bid. The 10-year auction last week went off well bid. So you've got a very similar setup to what you saw through much of last year where you had growth leading, but you also had this defensive posture. That's going to wrap us up for today. Take us for a test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.